Let's go to the next slide, please, which is in my appendix, and that has to do with gold. And for that, I'm going to go to Rhona O'Connell. Gold has been has seen a tremendous rally. What is your view on gold? Can you give us just a up, down, sideways? What's your view? Just go, all three.
It's all about uncertainty. Historically, gold's been seen as the ultimate hedge against inflation. Now, if you're a professional investor, you'd be much better off using the TIPS index as an inflation hedge as opposed to gold. We only took out the 1980 high in real terms when we got through 3,700 last year. So it's actually underperformed in terms of inflation hedge, certainly in major currency. The key element now is uncertainty, and uncertainty encompasses all sorts of different elements, the most important one of which is geopolitics. And that's not just armed conflict, it's the T word, there's tariffs. It's a degree of, how can I best put it? It's not pressable as we speak to know what kind of policy is going to be coming out of the White House within the next 48 hours, let alone the next 4 months. And something Ireland has pointed to frequently over the last year or so is the importance of the midterm elections this year. And the president is obviously aware of the fine balance, particularly in the House, between the GOP and the Democrats, and the associated need for some kind of consistency in terms of what he's delivering, so that people have confidence in investment, for example, which is important in terms of industrial production, and that talks to base metals. Obviously, Natalie will cover that for us. I don't think that the Iran shock had that much of an impact, or I'll rephrase that. I think the fact that the Iran shock itself had little impact on the price beyond a $300 run, which on a base of 5,000 is very little, to be perfectly frank, and it was short-lived, because that geopolitical intensity had already been priced into the market to a large extent. What we have seen over the last 18 months or so is that there's been a swathe of investors, both at the retail end and at the professional side of things, who have been looking for dips in the price in order to find value. And this is where we get into the Oscar Wilde argument about the difference between price and value, and they're two very different animals. Gold always maintains a value. The price is something different. When those $200-300 dips did not materialize, people in the end capitulated and got into the market. So I feel as if the market is not necessarily overcrowded, but it's pretty much a critical mass, I would have thought. If there's a downside risk, then if I had to pick one element which doesn't have anything to do with armed conflict, it's to do with the independence of the Fed. And the key for me will be the Supreme Court's findings on the Lisa Cook case. Not so much in terms of the balance of power within the Fed, because we've all said before the Fed is not a kingdom; it's a board of governors. It's much more importantly, as the cornerstone of the U.S. Constitution, is the separation of powers between the legislative, the executive, and the judiciary. And if the Supreme Court were to find in favor of the president or the administration's appeal, then that blurs those distinctions. And that leads to concerns over monetary policy, and the stability thereof could have a hell of an effect on the Treasury market. So if I had to find one particular element that I will be focusing on with a strong lens, it's that one.